Well, I'm excited to have Jason Moll here with us, who's a CPA, does a lot of work with artists. And I think this is going to be one of those episodes where people are probably going to take some notes. Like this is going to
Hopefully.
be a note taking episode because I think we're going to have some advice that's going to help artists save at the end of the year, right? On some
Yeah,
filings.
hopefully.
So let's just jump right into it. Like when you're helping file returns for, let's say, for an artist, what are some big mistakes you're seeing them making throughout the year that could be helping them in the long run?
Probably the biggest is just not being prepared.
Yeah.
A lot of artists have a hard time distinguishing between themselves and, I guess, the entity or the business that they are as an artist. And so, specific to your question, at tax time, the hardest is generally helping extrapolate income and extrapolate expenses.
Mm-hmm.
Generally, we can kind of get into this in a little bit about kind of how to structure things, but most of the time, especially newer artists, they don't have systems in place to distinguish their personal income and expenses from their business income and expenses. And that, you can miss a lot of things if you're not super organized with it.
Yeah. So it seems to me one thing, an artist should be treating themselves like a business at the end of the
Correct.
day, right?
Absolutely.
And so should they be creating some sort of business entity like an LLC?
Yep.
Or treat themselves as a sole proprietor? Like which way should they go?
Yeah, I guess the two aren't necessarily mutually exclusive. So anybody that is self-employed, getting paid for work that's not through a paycheck, is technically considered a business in the eyes of the IRS. So whether or not you have an LLC or have a corporation, I always recommend that you treat your business activities as a business. So the best advice I could give is setting up a separate bank account.
Mm-hmm.
Now, if you choose to go the LLC route or the corporate route, you'd want a bank account in the name of those entities. But otherwise, for most artists, especially those just starting out, just a dedicated bank account. It doesn't even have to be a business account. You can just go out and create a personal bank account with your name and just, title it in your bank business.
Mm-hmm.
Be really, really, really good about making sure that all of your business income goes there. So, getting set up with your PRO, sound exchange, make sure everything's dumping into that account, any live performances that you do, being religious about, I would have a separate card, a debit card for your personal account, a debit card for your business account. And anytime you're, buying equipment, traveling, use that business account. And what that does is at the end of the year, you can go into your bank account, export all of that activity to Excel or CSV, do a quick sort, and you know that you've got all of your income and all of your business expenses in there.
Yeah.
So that's the best advice I could give. Now, as far as do I need an LLC?
Does it get to, is there like an unlock moment in an artist's like financial trajectory where they go like, okay, we need to incorporate or we need to do, what's that look like?
So specifically for artists, generally speaking, when they first start out, I don't recommend getting an LLC. Many will just go out and get one before they talk to, an accountant or a business manager, just because they think they need it. I guess a misconception that I hear a lot is, artists will come to me and say, hey, I've got this freshly minted LLC. And they think that that is what either makes them a business or that unlocks certain expenses that they wouldn't be able to expense otherwise as a sole proprietorship. And that's just not true. In the eyes of the IRS, if you're an individual member that owns an LLC, there's no distinction with the IRS between a single member LLC and a sole proprietorship.
Okay. And what if we're talking about a band? Does that change anything?
So it does. That's a good point. And there's kind of a lot more to unpack there, but to kind of finish that thought with an artist, I generally don't recommend initially just a single artist. I don't recommend initially doing an LLC generally most of your income when you first start is going to be, you might have some smaller gigs, but a lot of the income coming in is either going to be, royalties from songwriting or publishing, potentially income or advances from record labels or publishing companies. And so just a standard sole proprietorship is going to be just fine. There's not really a concern for liability. With when things ramp up and touring picks up, and we're talking about larger production where you've got band members, crew, there's a lot of moving parts. There's potentially some, multi-state activity that we've got to deal with. That's generally when we will keep all that like passive royalty income on the sole proprietorship side, and we'll create like a touring entity, which is usually a corporation to do the touring side of things.
That makes a lot of sense. Like we have a lot of our established acts that we work with at Milestone Publicity. When we're doing invoicing, I'll see it's going to band name Touring Inc. or,
Right. Right. And it gets even more complicated when you said when the group is an actual group and there's, 3 or 4 equal parts, and then there's further complications with publishing too. Like an artist might either want to start their own publishing company and have a completely separate entity, in which case you would want an entity, for that. So it's depends on the artist, depends on the group, but ultimately, I think the bottom line is for somebody who's a solo artist, really just trying to get going, rushing out to open an LLC isn't going to help you.
Okay. So it's complicated is what you're saying.
It's not complicated. It's just unnecessary.
Yeah.
And you're going to sign up for, paying an extra $500 a year to do your annual report.
Right.
And it's not really getting you anything. So, the whole purpose of an LLC is, it really serves 2 purposes. It exists in perpetuity. And so if there's an interest in having that entity outlive you, there's benefit there.
Oh, okay.
And also limited liability.
Hence the name LLC,
Exactly.
Limited Liability Company.
Yep, limited liability company. And I can't speak too much to that because I'm not a lawyer. But in theory, you're better off, if liability is a concern for you, you're better off getting with an insurance broker and getting yourself a really good small business insurance policy.
Yeah.
Because, a lot of artists that come to me, I think they have it in their mind that the LLC is going to do for them what an insurance policy would do.
Yeah.
Right. The LLC is a last ditch effort. It's, things have gone so wrong. The LLC is insolvent. It's going to keep them from taking your house. But a small business insurance policy is going to pay them out and you can continue going on.
And to kind of dive deeper on that, I feel like, do you remember when, remember that rock band Great White? They were playing a club and their pyro caught the club on fire?
I don't recall that.
You don't recall that?
I
Okay,
don't.
well, maybe I'm making this up, but I think it happened.
It probably did.
If they were an LLC performing that show, maybe they're a little protected. Again, you're not an attorney, so you can't really speak too deep on that, but it seems like they would have some protection in everything that went down. I'm sure there was lawsuits. I think there was loss of life. I mean, a lot happened.
In theory, right? And so in that case, you'd want both. You'd want that insurance policy that hopefully stops it, but then yes. And of course, the thing with that too is making sure that your I's are dotted and your T's are crossed, right? Which means if you have an LLC, if you have an entity like that, making sure that when you go to do a live performance or something like that, your contract states your LLC, not your name, because just having it doesn't do anything for you. So,
yeah. And when we do like a service agreement with a new act that we're going to start representing and doing PR for, in our service agreement, I'm signing as Mike Gowan, CEO of Milestone Endeavors, LLC. Is that kind of along that thinking?
So generally speaking, your contract,
or if I use
your contract probably says Milestone Endeavors, and then you are signing it as the responsible party for the entity. But it's still Milestone that's in contract with the artist, not Mike Gowan personally.
Yeah, got it. Cool. Well, along the lines of an artist, let's say, or a band, they're picking up steam. They're touring. They're going on the road in a van. They're stopping at truck stops along the way, getting snacks, getting things. what on the road could be deductible as an expense for the band? I mean, mileage, gas.
Yeah. Travel, meals. Meals are going to be limited to 50%. That used to be 100 for a couple of years in the wake of COVID and all that, but now that's down to 50%. But generally speaking, bus, flights, baggage, really anything that you incur that you wouldn't ordinarily incur if you weren't traveling.
Yeah. So, and then let's say they're on the road. They're in middle of nowhere, driving through, let's say Texas or something, and the transmission goes out on the van. They have to put in a new transmission at the next mechanic that's closest, right?
Yep.
And they have to get towed. So the towing, that's an expense.
Yep.
The new transmission's an expense.
Yep.
Okay.
So the thing with business expenses is it's under the Internal Revenue Code, Section 162. It basically says that you are able to deduct any expenses that are ordinary and necessary in carrying on your trade or business. Now, obviously, there's things that are specifically excluded from that because, you can make some pretty outlandish claims as far as what's you think is necessary. But ultimately, the question you have to ask yourself is, as an artist specifically, is this necessary for me to do my job? And really more than necessary, is this going to help me do my job or help me do my job better? And then also ask yourself, is this something that somebody in my line of work would ordinarily have to purchase for their business as well? If you can answer yes to both of those questions, then there's a good chance that it's going to be something that can be deductible in some form. And so, every business is different. For instance, an artist, a musical artist can absolutely deduct pretty much any, musical instrument purchase they make. Me as an accountant, as much as I'd love to deduct my guitars, I can't because it's not ordinary or necessary for a CPA to do that.
For an example, this guitar hanging on the wall behind me. Now, this is decor for our podcast studio. So how do you feel that applies?
That's a gray area.
Gray area. So
I have guitars hanging behind, my backdrop in my office, and I don't deduct mine. But, if somebody in your case came to me and said, hey, what about this? Ultimately, my job as a CPA is to kind of, especially in this is a gray area, right? It's not like an obvious black or white answer. Just kind of walk you through it. And be like, if you want to take that stance and you feel comfortable defending that stance, I have no problem with you, claiming that as a, furniture or as an office expense or advertising, maybe not advertising for a guitar. And ultimately it's going to be up to you, the taxpayer. Once you sign that tax return that I prepare, those are your assertions.
Right.
And so unless it's something where it's just, fraud, I'm going to be okay with what the client wants to do.
Yeah. And let's say it's a DIY artist out there who is, again, they're picking up some steam, sound exchange, they're getting a drip from that, they're getting a drip from their PRO, like maybe they're getting some sync things going on in film and TV with some of their music.
Yeah.
Things are picking up, and now it's become their full-time job. So they should really be taking advantage of the fact that let's set up that business bank account or just a separate bank account in general and run everything through that. Keep the personal money and the business, the artist stuff separate and really lean into that. Yeah.
So not everything, right? But I think, like I mentioned a little bit earlier, I would have 2 cards. It could be debit cards attached to those accounts. It could be credit cards. But ultimately, every time you go to purchase something in your life, you got to ask yourself that question. Is this for my business? Is this ordinary? Is it necessary for me as an artist? And if so, make sure you're using that business card. If you're not sure, I'd say go ahead and use the business card. And that's what we can do at tax time, right?
Yeah.
I can get that export from you and you can ask me, say, hey, I'm not sure about it. Can we take it or can we not?
So at what stage do you think it becomes imperative that an artist or a band or even just a creative in the music industry teams up with a CPA and really leans into tax planning?
That's hard. I mean, as early as you can stomach the expense.
Yeah.
Right. Unfortunately,
but again, that is an expense for their business, right?
It would be. Yeah. Generally, I mean, technically we might have to do some math on like extrapolating an ordinary cost of a CPA versus like your incremental costs for the type of business that you have. But yeah, that typically would be something that you could deduct, but that's really tough because, you know, especially as an artist or any business that's just getting started, you need and you want the solid help. And sometimes, you know, a budget professional can actually do more harm than good.
Yeah.
So, me personally, I'm trying to build out things. I'm working on a course and like an online community where I can offer that and like offer this information in a packaged way that's cheaper than, you know, paying me to do your taxes, but at least gives you the answers.
Maybe gives them some kind of a framework or a blueprint that when they do jump on TurboTax, they have a little bit more understanding of what's going on and get the most out of it.
Exactly. And that's what, and sorry about the plug, but I mean, it's called the Business Financial Framework. And so it basically, it offers that. And so that's, if you can find something like that and it doesn't have to be mine, but a stepping stone until you can bite the bullet and get an accountant to, you know, do this stuff for you. And even beyond that, you know, a full blown business manager to do everything for you.
Yeah.
The sooner the better.
Let's say there's a band, they're on the road and they're at the point now where like, okay, maybe they're going to go open up for an act that's playing amphitheaters, you know, maybe it's a 50-date run. They're not going to be given any kind of bus. They're on their own to get to the gigs.
Yep.
And they're like, well, let's purchase a new van because we need it now. And we're going to need it probably over the next couple of years. And let me butcher this for you, and then you can correct me.
Sure.
But is it like Section 129 or something like that?
Close.
Where
You're off by 50.
I'm off by 50.
Yeah, it's Section 179.
Oh, 179. Yep. Okay.
And then there's also Section 168, which is bonus depreciation. So ultimately, it comes down to who bought the van, right? Because, you know, if it's a group and they have an entity, that entity might want to buy the van. But also, if they're not a group, legally, someone's going to have to buy the van, and
so
they'd be entitled to it.
They are. Let's say they are an LLC, and the one dude gets a wild hair, and he's like, I bought us a van, guys."
Yeah.
Their mistake probably was not doing it through the LLC. Potentially,
yes or no. So, I mean, partnerships, an LLC with more than one member is a partnership in the eyes of the IRS. Partnerships are extremely complex, and they're extremely flexible. And so if one person went out and bought it, I mean, we could structure it a number of different ways. If the business as a whole still wanted to share the cost of that, they could like do a reimbursement. The business is reimbursing that owner for the payments, and that way we can kind of make it to where the whole pie is even. If that partner wanted to absorb the cost, they could potentially deduct it against only their income as like an unreimbursed partner expense. But just to kind of touch on like the tax law, like the overarching how you actually deduct that, you could do 179. So basically, there's a de minimis amount when you purchase a fixed asset that's different than like a consumable or an expendable, where it's just, you know, paper clips or a piece of paper that you're going to use and it's trash. A fixed asset is something like a guitar or a van or something that you're going to use for years. And the IRS basically says you can't just deduct that. So you have to use what's called depreciation. And there's different ways that you can depreciate fixed assets based on what it is and also certain elections. So for instance, Section 179 is an election that you can make to effectively depreciate the full amount of that asset in the first year. And then there's, I don't need to get into the weeds of the difference between 168 and 179, but effectively there's ways to deduct all, if not, or a portion, if not all, of fixed assets in the year that you buy them.
Well, if there's any artists out there or bands listening and you just bought a van, I hope you're listening.
Yeah.
Okay. Let's talk about, we just got through a new election cycle, a new administration's coming in. Do you forecast any potential opportunities on the tax side that might be coming up that's going to help bands or artists or creatives?
So I don't have a crystal ball, so I don't know what's going to be coming down the pike, but in 2017, there was the Tax Cuts and Jobs Act, which was like a massive overhaul of the tax code. And a lot of those provisions are set to expire at the end of 2025. The QBI deduction, the qualified business income deduction, it's basically a 20% deduction for free off of your passive business income or pass-through business income. That's set to expire at the end of 2025. So my hunch is that, that previous tax code was, championed and pushed through by the Trump administration. So I have a hunch that he's probably going to want to address it, either in the form of extending or making the Tax Cuts and Jobs Act permanent, or some other, maybe another big overhaul. But as far as what that exactly looks like, I don't know, but it does present some potential opportunities. I definitely expect there to be changes in the next 2 years.
And to keep going back to the band on the road kind of thinking, let's say they got their buddy in the van with them and acting as like the tour manager, right? Okay. The road dog out there with them. And they're just paying him out of pocket. Maybe they're paying him out of tips. I don't know.
Yeah.
Now, should they be, at the end of the year, when it comes to doing taxes, should they be treating that person as a 1099 independent contractor? And if so, is there pros and cons to that? Yeah.
So technically, whether you pay somebody as an employee and withhold taxes and all that stuff versus a 1099 contractor, it's not really a choice. It's like a legal classification based on the IRS has like a 20 or 21 point checklist that you can go through to determine legally, is this an employee or a contractor? In that case,
you can't really dictate to them what to do, right?
Yeah. So there's, and I don't have it, but basically there's the general idea is that you tell the person where you can hire the person for a specific job, but you can't control the means by which they do it. So, you can't really tell them what time to do it, and that sort of thing. And it also, it's situational. The 21 point checklist, you might hit some of them, you might not hit all of them, but ultimately for that specific example, if you've got a manager like that, that's generally a business or a contractor that's doing that type of role. Generally, artists don't hire managers as employees. So in that case, yes.
A big trend right now is, and it's kind of a trend because I didn't notice it early on in my career, but I think over the past 5 years or so, I've been seeing management consultants come about.
Okay.
So in that regard, do you know what a management consultant is? It's basically someone that they're paying a flat fee for management assistance.
Interesting.
As a manager, rather than a commission, a manager taking commission off the artist's income.
I haven't seen that a whole lot, but I'm like we discussed, I'm doing mostly tax side of things, not necessarily business management. So I see who gets paid and how much, but I don't necessarily see if it's a commission or a flat fee. But I guess the big thing to note, especially whether it's a manager or anybody, for artists that are out there and they are paying crew or band members or anybody, you want to collect a W-9 from everybody that you pay. Basically, that W-9 just gives their legal name or their legal entity name, their tax ID, and their mailing address, because you've got to issue those people a 1099 at the end of the year.
Right. Yeah, that's crucial, especially if you get audited, right?
Yeah, I mean, if you get audited for, if you deduct contract labor of 20 grand and they don't see any 1099s that you've sent in, that could trigger an audit. And if, they discover that you deducting payments that should have had a 1099, they could effectively disallow those payments.
Yeah. And so is the biggest nightmare for you when somebody didn't separate their business money and their personal money, and there's an audit and everything is all intertwined?
Yeah.
Is that the biggest nightmare?
Well, it's not a nightmare for me, because it's not my job to go through and do all. It's a nightmare for the client.
Yeah.
Because ultimately I can try to do that, but especially in the case of an audit, if you don't have a receipt or something backing it up, probably not going to want to.
And how long do people need to keep the receipts? 5 years? Is that the rule of thumb?
I think it's 3 years.
3 years? Okay.
And I would say 5, because, it's probably 3 years from the time the return was filed. And so if you just say 5, it's generally going to cover that time span.
So I don't know if it happened or it was going to happen, but did the IRS end up hiring like thousands and thousands of agents?
They did. I think it was like 87. And
87,000 or 87?
Yeah, no, 87,000.
87,000 people were hired at the IRS.
And actually, it ended up being a really good thing, at least for us tax practitioners. I haven't noticed, it's totally anecdotal, but I haven't noticed any increase in audits. I think me personally, since I've done my firm, I've filed, maybe 1,000 to 2,000 tax returns in the last 5 years on my own. And I've only had one audit, and it was a mail audit. It's just an automatic thing. It wasn't like a, hey, send us everything you got type of thing. But
what's a mail audit?
Basically, they're interested in a specific item. So it could be like
that guitar hanging behind me, that gray area.
No, not a specific item. It's generally like the most common one is called like the automatic underreporting thing. It's not called the thing, but it's automatic underreporter system. And effectively, what it does is it takes the gross amount of income that you reported and it matches it to your IRS transcript. And so basically, if you reported $20,000 of income, but your IRS transcript, people have filed $30,000 worth of 1099s that they said they paid you, they're going to send you a bill that basically says you underreported by 10 grand. Here's how much we think you owe. And then you got to deal with them.
Got it.
On that versus a full blown audit could be like, hey, we're interested in your business. We want to see,
everything,
tick-tied receipts for every single line item on here. And that could even end up with an IRS agent, coming to meet you in the boardroom and you guys digging through receipts.
Oh man, that's a hassle. So they hired 87,000 and you haven't really seen much of it.
No, but it did help us out a lot. They're answering the phone quicker and
so that is helpful.
Yeah. They're modernizing their web tools to where I can like access power of attorneys and things online, which has been great.
Now I did see, because I guess the Trump administration is going to put Elon Musk in some sort of position for government spending, right?
Yeah.
Did I hear, is he going to audit the IRS? I think I seen him he said that.
I don't know if he mentioned that specifically. I don't know how much rain he can get, because it's not. Can you
audit the IRS?
I mean, I'm sure the federal government could, like Congress probably could. Congress is in charge of the IRS. They're the ones that codified it, basically. But I don't know.
Wild.
Yeah.
Wild times.
Yep.
Let's see. Where do I go from here? I feel like this is so dense of information, especially for me. I mean, ever since I started working with you, I'm starting to get like an understanding of taxes, because before working with you, I was the TurboTax guy.
Yep.
But then with it, having a business, and there's just a lot more moving parts to pay attention to.
Yeah.
When it comes to those, I mean, any level of an artist, do you see any key areas where they're overlooking things or leaving money on the table, or just things that they're not thinking about?
Not generally, or I should say, not like a specific item that I can think of. The thing that comes to mind when you ask that is really just the artists not separating those accounts and having business expenses that they don't make note of, and just missing out on those deductions that they had but aren't capturing.
Yeah.
So,
okay. Well, let's do one final deep question again.
okay.
What are 3 things you think an artist who's not been paying attention to any of the stuff we're talking about, what do you think are the top 3 things that they should focus on in this coming year to better be prepared?
3 things.
Or 5 or 10.
I'd say the first one would be treat yourself like a business, right? You're not just a person, going about collecting income from different sources. You're a business. So act like you're a business. Number 2 would be in line with that, which is, a point that I've mentioned a couple times, is get super serious about distinguishing yourself from your business, whether, that's an LLC or a sole proprietorship. Get really good about distinguishing yourself and your business financially. Biggest thing there is getting that bank account set up, making sure you go through, make a list of all the different sources that you're getting income from. Make sure all those are tied out to be depositing into that business account. Make sure you're using that account for business expenses. Those 2 things.
Those are massive.
Those are, I can't even think of a third.
Yeah.
Like if you're doing that, you can build from there.
And maybe get like a mileage tracker, right? Like if you're doing a lot of touring and you're doing a lot of driving, you're taking meetings and you're going to meet a manager across town that's 20 miles, track it, right?
Absolutely. Absolutely. Yeah. It's required. When you report mileage, they're going to make you check a box that says you've got written evidence of the mileage that you're claiming. So absolutely.
Keep those receipts.
Receipts as well. And
let's say somebody out there listening, or like, I need a CPA, I need to contact Jason Moll.
Yeah. What's
the best way to reach out to you?
Yep. JasonMollCPA.com.
There it is. And plug your course one more time that's coming out.
It's not ready yet, but I'm hoping at the start of the year to where I'm actually going to be offering it to all of my tax prep clients as well, because it answers 99% of the questions I get throughout the year from all of my clients in all industries.
And then you won't hear me bugging you.
You're more than welcome to, but I might say, go check your course and this section. And so that's going to be coming out soon. And if you go to that website, you'll eventually see a tab for it.
Very cool. Well, thanks for coming in and taking the time to give some education on taxes.
Yeah, man. Thanks for having me.
Awesome. Thanks.